Okay, guys, I am recording. Okay, welcome to the training. There's two students. One is spanking new and she just opened her account with $100 and she is going to turn the $100 to 20K, and we are going to take you through the challenge. It might take some time, might take a few hours, might take a few days, might take up to 6 months. We have to complete the challenge in 6 months, max. Some students have done it in 1 month, others have done it in 2 months, others have done it in 3 months, some have done it in 6 months, and some do not finish the challenge at all because they lack focus, confidence, and consistency. They quit on the way. But the ones who stay up to the end, they always end up learning the skill and succeeding. Okay, so let's jump in. So the first trade we're going to take is based on these assets here, and then I'm going to explain. So we're going to follow three things. We're going to take the trade. While the trade is going on, we're going to talk about the mindset portion. Very important, because they say success is 99% your mindset. So we're going to talk about the mindset portion that you need to have, the psychology that you're supposed to have, and then I'm also going to now explain what the strategy we are using is. And at the moment, she started her account at $100. She took a few trades with our help, and now it's at 112. This is a spanking new account, and the student could only afford $100. Now, some of you can afford less, some of you can afford more, and whatever I'm showing you guys here, it's very risky, so only go into this with money that you can afford to lose. You can lose your entire investment, or you can lose everything, and in just one, if you don't follow the right strategies. And what I'm sharing with you guys is not a get-rich-quick scheme. I am not a financial advisor, and none of our coaches in the Smart Wolf Club are financial advisors. So we are just sharing our experiences, and this is for your educational purposes only and your entertainment. Do your own due diligence, guys, okay? So before we proceed, let's say a word of prayer. In the belief of the power Almighty, we pray that the trades we're going to take today, they will be in profit. We pray this in the belief of the power Almighty. Amen. Guys, we don't care what you believe in. Whatever you believe in, the master teacher says, learn, practice, and teach others. Okay, let's go. Okay, so let's look at the charts, and we are analyzing the charts, and we are sharing these screens with my students. There's many of you on here now joining. So if you're joining this for the first time, make sure you like our channel, subscribe to the channel, hit that bell notification so you're notified when we have our live trainings, okay? And you'll be invited to our live trainings. Join the Smart Wolf Club. If you want to learn how to trade, this is what we are learning here is binary options trading. So you can join the masterclass. If you want to learn how to trade stocks, you can join the stock trading masterclass. If you want to learn how to trade Forex, you can join the Forex trading masterclass. If you want to learn digital marketing online, you can go ahead and get the relevant masterclass. Now, sometimes those fill up really quickly, so you can join the waiting list, and shortly after you'll be admitted to the class. You'll be enrolled, and you'll be working with some of the best coaches, people who have been around for many years. And we have coaches from all over the world. If you've not been watching our trainings, go and watch the playlist. I'm going to attach it below here. It will say KISS, it will say live trading. Go and watch those. Binge watch the trainings and follow those strategies, and you will learn the skills. For you to become successful on here, you've got to learn the skill. This is a journey. It's not a marathon. I mean, it's not a sprint. It's a marathon. Rome was not built in one day. You have to learn the skills. Okay, so let's go, guys. The platform I'm using here for my student is Pocket Options. Some of you can use different platforms depending on what you like. Wherever, which part of the country, the world you come from, you can use whatever platform is available for you, and you can be trading from your laptop, your cell phone, doesn't matter. Download the apps and create the necessary accounts. I'm going to put some links in the description for you. You can go and check out those platforms. This is Pocket Option. This is what my students are using. Go ahead and use our link. You get 50% bonus on a deposit from $50 and above. So you put 50, they give you $25. You put 100, they give you $50. But read the terms of the bonuses because they keep changing those. So at the moment, I'm not sure what's going on, but you get 50%. And right now, look at this. So we're going to look for a pair that we can take a trade. And then once the trade is going on, we can be talking about the mindset piece. Okay, and we're going to explain the strategy that we are using. We use a flagship strategy. We call it the KISS, KISS. KISS, keep it simple, stupid, because we like to keep everything simple for our. Okay, so we have jumped in. Okay, so the trade that we just took, we jumped in and it went against us. So hopefully it will come down. If it doesn't, we're going to have to take another trade, and we're going to take a trade that is 2.5, okay, in the opposite direction. Okay. Okay. So we keep watching that and we see what happens. If it doesn't go our way, we are going to hedge the trade using a martingale factor of 2.5. That is from our KISS strategy. So guys, if you don't know our KISS strategy, this is what the KISS strategy says. It says we are targeting a daily profit of 3%. So 3% of where we started was 112. Okay, so this one seems that it has gone away from our thing. So we're gonna hedge by taking an opposite trade, and it's gonna be at 2.5. So the idea is to hedge our loss, and we're gonna take a trade in the opposite. But it looks like the market is not in our way now. If you find a pair is misbehaving like that, then you're gonna have to go to a different pair and analyze. So guys, it doesn't matter if you're taking a trade and you lose. It's okay. That's part of the game. It doesn't matter. It's not the end of the world, but you just do your due diligence. Follow the rules. So right now you can see it's still going there. So we are in the money now. So hopefully we'll recoup our loss and also make profit. So we recoup our loss and make profit. Okay, you can see, guys, you can see that's in the money. We are using a simple strategy. It's the KISS strategy. There you go. It's a small account, $100 to 20K in a very few short time. Okay, there we go. And we got that. Okay, so we recouped our loss. And you can see our account is growing. Okay, we started from 112. So we need 3%. And then we are out of the market. So let's see what is 3%. You can go to old Google calculator here and calculate your 3%. And if you want to learn the strategies, check link in the bio. Subscribe, guys, and follow us. Okay? Guys, you can see that's the value we're using a simple strategy. It's the KISS strategy. Yep. It's a small account. Yep, French, 808. Okay, guys, so we're going to do 112 times 3% target daily profit. So it is 115.36. So that's what we are looking for this small account. I think some of you have been watching the previous trainings where we had a student whose account had gone to about 400. That's a different student. She's on here too, but we have new students each time joining our master classes. So this one is starting from 112, and our target goal is 115.36. So once we get to 115.36, we call it a day. Okay, this is 112, and so level 1 trade, you could see we started with $1. Level 1 was $1. Level 2 was 2.5 because we multiply by 2.5. So, okay, so just cancel that. So we had 1 times 2.5. And then the third level would be 2.5 times that. It is 6.25. So if we lose the next trade, we're going to go to level 3. It is 6.25. Then level 4 is going to be 6.25 times 2.5. So that's getting really big, 15.63. Okay, 15.63. And then level 5, I put an asterisk. You guys know why I put an asterisk. If you don't understand, go check our previous training. The reason why we're putting an asterisk is because this starts really digging a deep hole in your account. So you don't want to get to this level. This is a very tiny account. So if you're going to use $39 to trade, to take one trade, if you lose that, it pushes you way, way back. Okay, so that's the reasoning. So I really don't want to use that, go to that level. Okay, but sometimes we have to, and the student who was on here, she can take that risk. Okay, so this is your money, so you decide what risk. We're not giving you any investment advice. This is just showing you our experience with you, and you're in control. Okay? All right, guys. We will continue this in a few minutes. Okay, guys, we are back after that break, and let's rock. So what we are doing is basically going through our trading for my student. They are on here. There's a number of them right now from all over the world. And this particular student whose account we are working on, she is spanking new. Day one, guys. Day one. Okay. So this is to motivate you guys that you can start at any time. All you have to do is get your pocket option account. Okay. And the link is in the description. You just need your name or your email address, get your pocket options account, get that free demo account, start following what we are doing. And we trade live every single day. So join the Smart Wolf Club. The link is in the description. You'll be notified when our lives are coming, live trading, and you can follow along, okay? So right now I'm going to take live trades. Okay? We're going to take live trades here on this student's account as we grow her account. The goal is to turn this $100 to $20K. Now, how long it's going to take, I don't know. We give our students up to 6 months to complete the challenge. We have students who do it in shortest time possible, depending on how quickly they learn the strategies and how much time they dedicate to their trading. Some of you are extremely busy, stay-home mom, stay-home dad, busy professional, so you don't have a lot of time, okay? You want to come on here, spend 10 minutes, and you're out of here. 20 minutes, some spend 1 hour. So, of course, those who dedicate more time, they definitely get to complete the challenge sooner than those who are spending less time, okay? Now, again, it also depends on a lot of things. The market, which we don't control, we have no freaking idea what the market is going to do today. We are trading on a weekend, okay? That's the advantage with pocket options. Any options, you can trade 24/7. It does not matter. We are trading the OTCs. They're extremely volatile, extremely risky. So only go into these monies with money that you can afford to lose, okay? If you can't afford to lose it, don't trade it, guys. Anything online, anything offline where it involves investing your money, just know you can lose your money, okay? You can lose your money, and so just do it with money that you can afford to lose, okay? If you can't afford to lose it, don't risk it, okay? And this is not a get-rich-quick scheme. I got to put these disclaimers here because some people go crazy when they see something like this, okay? So this is not a get-rich-quick scheme because you have to learn these strategies. Some of us have been doing this for a long time, okay? And if you want to learn from us, you can join the master classes. Just go join the Smart Wolf Club and you can join our master classes, okay? If you want to learn how to trade Forex, you can join the Forex Trading Masterclass. If you want to learn how to trade stocks, you can join the Stocks Trading Masterclass. If you want to learn how to trade crypto, join the Crypto Trading Masterclass. If you want to learn how to trade options, you can join the Options Trading Masterclass. If you want to learn online digital marketing, you can do that in our Digital Marketing Masterclass. And if you want to learn everything about your investment strategies, new markets, emerging markets, you can get the financial bundle. We have all that in the Smart Wolf Club, guys. It's up to you. Go ahead, get busy, get active, learn the strategies. That's the only way you're going to get ahead. So our training is going to involve 3 things. We're going to talk about the mindset piece. We already took some trades and we're going to continue taking the trades because our target for this student is, her student has set her target at 3%. Okay, you can see here, she started her account. This is a spanking new account. She put $100. She took, I think, 1 trade and we started at 112, okay? Target for the day is 115.36. Once we hit that, we're going to shut off the training and she can continue trading if she likes, but this is her goal, 3% per day. That's her target, which is just 3% daily target. And that will grow her account to over 20K, turning 20K. It's not going to take one trade to turn $100 to 20K. No, guys. That's how we get it wrong. You come here and you think you can just put $100 and get 20K. No, it doesn't happen like that. You got to follow these strategies, okay? So my student has a risk appetite of 3% daily. Some people have a higher risk appetite. Some people will target 10%. Some people have a low risk appetite. They target 1% every day, every single day. And you compound that, over time, it's going to, we use the compounding strategy. So while we are going through our key strategy, we talk about the strategies that we are using here. These are the principles that we're going to apply. Target daily profit. You have to write it down. This student, 3%. We are following 1% trading rule. What does that mean? If our account is $100, our first trade level 1 is going to be just $1. 1% of 100 is 1. So you're going to take $1 trade. If you lose that, we're going to hedge the trade using a modified Martingale strategy with a factor of 2.5. So it's going to be $1. Okay, so it's going to be $1 times 2.5. Okay, so that gives you level 2. If we lose level 2, it's going to be 2.5 times 2.5. It's going to give us 6.25. That is our level 3 multiplied by 2.5. That's going to give us our level 4, which is $15.63 multiplied by 2.5. That's going to give us our level 5, which is $39.06. Now, looking at this account, $39 is a lot of money. Okay, it's a huge risk, but that's a risk that my student is willing to take. If you're not willing to take that type of a risk, then you can scale down your Martingale factor. Instead of using a 2.5, some people use a 1.5 here. Some people use just a 2.0. Okay, 2.0. Okay. So this student is comfortable with a 2.5, and that's okay. And then we use a compound growth strategy. Now, how is this compound thing? You can bring up this asset here, compounddaily.org. You can go to this website, I think it's compounddaily.org. Let me see if that comes up. Yeah, it should be this one here. Compounddaily.org should give you a calculator that can show you about how many days, if you're targeting 3% every day, how long it's going to take you to get to 20,000. It's about 6 months, really. Let's see, compound daily interest calculator. So you come to that website. It's a free website, okay? The only thing you have to put up with the advertisement. So don't click on any of those. Okay, so here, you see, we're starting from $100. Daily percent is 3. And let's put 180 days, and we are investing 100%. Okay, we are not withdrawing anything at the moment, and we are starting today. So let's see how long it's going to take to get to that level. It's already calculated for us, and you can see by day. See, look at the numbers right here. By day 180, this account would be at 20,448. Okay, by day 100. You want to be around this level here, 1,921 from $100, okay? So you see how quickly these things can grow, very, very fast, okay? You cannot get this type of return anywhere else unless you are doing something shady or something crazy. Yeah, 3% daily is quite a high return, and that's why it is very risky. It's a high return, high risk, and therefore you can easily blow your account. So you have to trade using proper risk management, and that's why we stick to like 1% of your account, and we scale that for hedging purposes only. Okay, so we use level 1 for our majority of our trades, which is just 1% of the account. That's what we are willing to risk. If we lose that trade, then we hedge the trade by using the second 2.5 level 2. If we lose level 2, we go to level 3, which is exposing your account now to a bigger risk, and therefore you have to live with that. That's what we talk about, the emotional part and your psychology. How does that make you feel? This is where the psychology part comes in. This is where the mindset piece comes in, and that makes the difference between somebody who is going to persist and consistently make profit in the market and somebody who quits as soon as they lose the first trade. They quit because the way it makes them feel. So you've got to discipline your disappointments, okay? Because you're going to be disappointed when you see your account coming down from, let's say, 130 to 80 or to 50, halfway, cut by half in one single trading session because you lost, and that's how the market is. So once you lose, after you take the 5 trades and you lose, after you exhaust the 5 levels, like this student here, some people cannot stomach 5 levels. Okay, that's why I'm putting an asterisk here. This is purely optional, depending on your risk tolerance. Some students can stomach up to level 5, which is a big chunk of your account. Some people will end up at level 4 and they quit, they leave, they stop, leave the market and come back the next day, okay, ready to trade, because the conditions are going to be different always, every time you come to the market. And the market changes every single minute, okay? Okay, the brokers, we are trading what we call OTC, so the brokers can also manipulate the charts. They can manipulate the data here. If they want to collect your money, they can do that very easily. All right, so let's go back to the $1, which is our level 1 trade, and we're going to take a level 1 trade. So we're going to look at the pairs, okay, and we are using a key strategy. And what do we have here, guys? We have literally what I can do. I can remove all these and just have the bull powers, and let's bring a moving average, and we call it the moving average 8. You can use whatever indicators you like. Now, for newbies, like my student here, we are learning the indicators. So right now I'm going to use one that we call the moving average 8 EMA, okay? Now, for some students who don't want to deal with the indicators, you don't really need the indicators. You can use what we call just candle chart analysis. You just look at the candles and see what direction they are heading into. If you see more red candles like they are right now here, you can see from this part of the chart from up here all the way down, it is all red, 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 and it is showing that it is going down until this level, and now it starts going up, okay? And you can see, if you use the bull power, this is an indicator that you can find here. You see the bull's power right here? That's an indicator, and we're just using the default settings. I can probably just make it thicker so you guys can see it. Let's put 2 pixels here. There you go. So you can see the bull power. The inputs are still the same, 13. I did not change them. And you can see that's the bull power right there. You can see, and there is a midline of 0. So when it is above 0, it shows that the bulls are in the market and it's most likely an upward trend. So we'll be looking for the green, the buy. If it is below 0 like it is right now, it's showing that it's going down, and we can actually go down and see what happens. It doesn't matter. If we lose, we hedge our trade using the 2.5, and we're going to take an opposite trade. Very simple, guys. Extremely simple. That's why we call it the KISS strategy. I don't know what to tell you guys. You got to keep it simple, stupid. If you want to succeed in anything, do not make it complicated. Because if you make it complicated, it wears you down. It wears you down. It makes you tired. And most of your students will never cope with it. They will quit. They will give up. It's too complicated. Make it simple, stupid, such that a 16-year-old can take it and run with it. A 99-year-old grandmother you can explain to them, and they can take trades. So guys, you can see it's in the money right now. There's no guarantee that it's going to be in the money, but it is in the money. So how easy is that? We just took the first trade, $1, and boom. Our goal is to get to $15 and some change. I'll show you what our goal is. Our goal for the day is right here, 115.36. Once we hit that, my work is done. Now, if my student wants to continue to trade, as long as she's available, she can continue trading, and again following the same set of rules. Very, very important that you set your rules, and we write them down on a notebook. Here is a notebook. This notebook costs $1.25, and here is a pencil or a pen. This costs 33 cents. So $1.25 plus 33 cents. How much is that? $1.58, and you have the resources that you need. The only other resource you need is your $100 to get started in this challenge. And then, of course, you need to create your pocket option account, and I'm putting the link in the description for you. Use the link so you can enjoy the 50% bonus, okay? So if you put $100, they give you $50 bonus, and you can start trading at 150 pushing you closer to your 20K goal. And then come back here on the Smart Wolf Club channel and make sure you follow our live tradings, and you can follow us trading live, guys. So let me explain what I have here, because people are asking me, what are all these indicators? You do not need the indicators to trade, guys. If you don't like indicators, you don't need them, okay? If you don't know how to trade without indicators, I'm going to put the link for our KISS strategy. There's a whole playlist of the KISS strategy. Many videos. We've done almost 40, 50 videos. The playlist is right here. It says KISS strategy playlist. Go ahead and watch that. The first, second, third, fourth video, they show you us trading. They show you live. We are trading live without using any indicator. No indicators. We just come to the charts. We look at the candles, the way they're behaving. Boom, we trade. So guys, you can see here right now. Look at this. Did you see what the bull power is doing? The bull power is a strength indicator. Okay, this one right here. It shows the strength in the market. So is it going up or going down? So when it is above the zero, you can see here, the mid mark is zero. It's above the zero line. That means it's the bulls have come into the market and it is going up. So you'll be looking for buy trades, okay? Now, if it has reached the level, the max level, the chances are that it's going to start going down. It's going to be a change of trend, okay? But not necessarily. Sometimes it stays up there. So always be careful with what you do. And then the only other indicator I'm using is my favorite, and our favorite is the 8 EMA, okay? So it's EMA, not SMA. EMA means exponential moving average. 8 EMA, and we are going to put 2 pixels so you guys can see it. And there we go. So we have 2 indicators. It does not matter what indicator you want to use. If you already been trading, you know a lot of indicators, that's up to you. But the strategy is very simple. We call it KISS. We start with level 1 trade, which is just 1% of our account. And we want to trade using that, if possible, until we hit our goal. And in this case, our goal is 3%. I have students who target 4%, 5%, 6%. I've seen students even target as much as 10% in one single day. Now, that is extremely risky. The higher the return, the higher the risk. It goes without saying, okay? So if you're targeting more, just know that you're also exposing your account to a larger chances of losing your account, okay? So you have to live with that, okay? It's your money. It's your money. It's not our money. And we are not giving you financial advice on this part. But we can tell you one thing. This is risky business, so don't go into these trades with money that you cannot afford to lose. Okay, if you can't afford to lose it, don't trade it. Go look for a job, 9 to 5, put the money there, save up some money, and you can trade. Take your chances with that, okay? Because we don't control the market. It doesn't matter whether you're trading Forex, stocks, it doesn't matter. They are all very risky because the stocks can go up and down based on news, based on what the authorities are saying, whether the interest rate is going up, the lending rates have gone down, the market is crashing, the strength of the currency, in particular the economic situation, the pandemics, the natural disaster, wars, internet hacks, whatever. The company is hacked, boom, their stock goes down. The CEO is fired, boom, the stocks goes down. Sometimes, you know, these things that we cannot predict or control, okay? So all you have to do is manage your risk. That's the main thing. Manage your risk and your mindset. So when you see yourself losing, you don't panic and close your trades at a loss, and then you end up leaving yourself in a big hole. You have to have a strategy of trying to get out of the drawdown. If you are heavily drawn down, you have to find a way of coming back, getting out of those drawdown without having to close your trades in losses. You guys have heard of hedge funds, okay? They're called hedge funds because they rarely close trades in a loss. What they do is they hedge their trades, okay? They take a trade going up, the market changes, it starts going to the opposite direction, they are in the negative, they take a trade in the opposite direction, they start making profit in that trade while they are finding a way of managing their loss. That's how they do it. That's what they call hedge fund managers. At the end of the year, they report profits. They don't report losses. They tell you 8%. The fund grew by 8%, 9%, 10%, 15%, 30%, 100%, 150%. It all depends on the markets and what these traders are doing. These are professional traders, okay? So they use the hedging. And most of us don't know those because we are taught by these gurus that we watch online, on YouTube, on Instagram, and they tell you use a stop loss, use a take profit, and sometimes the stop loss is 3 times larger than the take profit, so you're already starting at a loss. You're starting at a disadvantage. If the trade ever hits your stop loss, you're 3 times into the loss. You have to win 3 more trades just to recoup your losses. So you see, that's already skewed in a way that you're going to have to lose. And the institutions look at that. They know where you are, where the stop losses are, where the take profits are, and they know how to manipulate the market that way so they can liquidate all the retail players and make profit. That's how they make profit. When somebody is making profit, somebody else is losing. That's how it is. It's matter. You cannot destroy it. It just transforms from one energy to another energy. So when this side here is losing the energy, the other side is gaining the energy. When this side is losing the energy, the other side is gaining the energy. It's just an equilibrium. An equilibrium is set. An equilibrium is... You guys remember your physics, sir? You remember physics? Class 101? Equilibrium? Status of equilibrium? From high concentration to low... from low concentration to high concentration? Some of these things, we have to apply them even in the markets. That's exactly what happened. When I lose my trade, somebody else is gaining on the other side, okay? So if I took a buy and I lost, somebody had taken a sell trade and they win. When we take a long trade and somebody takes a short trade, when we lose our long trade, the guy with the short trade gains what we lost. So the market just morphs from one form to another. It establishes an equilibrium, okay? So we cannot break it, or it just transforms into another energy. Okay, so that's exactly what the institutions do. They're called market makers because these people come in and take trades in millions, gazillions of dollars. Okay, if you buy 2 stocks of Apple, these guys will buy like million stocks of Apple. They put millions. They can actually move the market in their favor. Okay, to liquidate every little me and you, everybody else can be liquidated by just one move. One soup. We saw that in the crypto market, right? When the big institutions started buying the ETFs, they pump billions of dollars. It moves the Bitcoin was moving up. So some of us who had short trades, what happens? You get liquidated. Boom, you're wiped out in the process. So that's exactly. Now you guys can see there's a massive candle here, and you can see the bull power is pointing up. That means the bulls have come in and it is going up. But what happens when something goes up? Something is going to bound to be coming down. So we can just hedge our trade and take a trade going down. We could be wrong, we could be right. Okay? There could still be enough power to push it up, but let's see what happens. Okay? So we hedged a trade. We shouldn't have. We should have just taken a 1% because we won the other trade, but that's okay. If we lose this, we're going to go back to 6.25 so that we can recoup our loss. This is a trade. We are learning. My student is learning, and $100 is money that she can afford to lose. Okay, you have to define that very clearly in your mind. Is this money I can lose, or is this money I can not lose? If you cannot lose it, don't trade it. But you can see it's already going in our direction. When I see a massive candle like that, there is likely possibility that it's going to pull back. Now, sometimes we are wrong. The energy in the market could be so strong that it continues going up in that trend, and it looks like it is going in that trend. So what we're going to do is we're going to have to hedge this going up, and hopefully we'll see if that is going to continue. Now, if it doesn't continue, then we have to go to the next one, and the next one is the 1563. So you guys are going to get a chance to see what I talk about here. Martingale, hedging, everything is right here for you to see, guys. You can see what I'm talking about here. You can see this. Here we have parallel lines. We have other indicators if you want to. Some people like drawing, but you can see already our trade. So there was enough energy because the bull power is showing us it is going up. And as long as it's above the 0, guys, you'll be looking for call options. Okay? You'll be taking, your chances are high to succeed if you're taking what we call the call option, the buy. So if we win this, I think we will get to our goal and way above, and we can call it days. Yeah, there we go. So we are at 117.83, and our goal for the day was 115.36, that my student can continue trading if they like, and they can report the results when we meet in our next live. But I'm going to turn off here and jump onto my next training, where I'm having a student who's going to learn how to trade stocks options. They are going to learn how to trade stock options. So what is our profitability from 112 to this? You can see it's $5.83. Okay, number of trades. Let's look at the number of trades. We started right here at $100. Let's see. She took quite a number of trades. So we came in at 12. So we took this one, we lost that, and we hedged it. So she started here, 1, 2, 3, 4, 5, 6, 7. So there's 7 trades and 2 losses. Okay, so she has 7 trades and 2 losses. So 7 trades, 5 wins, 2 losses. So you don't have to win all your trades. You can see that. It doesn't matter who is trading, whether you've been trading for a million years. You only need to have a certain percentage in the market. Okay, you could even win 50% of your trades and lose 50%. But if you're managing your risk properly, you can still come out profitably. Actually, I've seen students who only do 30% win rate, and they're still being able to come on top of the market. Okay, because it depends on what you're losing. Okay, if you lose more than you can win, then of course you're going to be negative. But if your wins are bigger than what you're losing, you are going to be positive. It goes without saying. It's simple maths. Okay, so guys, let's recap this training today. First, we've talked about the simple strategy that we are using, which is the key strategy. We've talked about the importance of you managing your risk properly using these rules, the key strategy rules that we've talked about, using 1% of your account. Okay, so you clearly define your target before you even start trading. You define the rule that you're going to use 1%. Okay, some of you have a higher risk appetite. You can 2%, 3%, 4%. I've seen students use up to 10%. Now, that's extremely risky. The higher you're going, the riskier it gets. Okay, so just know that in your mind, in your psychology. Using a modified matching strategy, again, the factor you are using to multiply your base 1, base 2, base 3 is defined by your risk appetite. Some people can only use small risk, 1.5, 2, 2.5, 3, 4, 5. I've seen people use up to 5%. Now, then we are employing an old secret called the hedging strategy. This is what the institutions use. This is called the institutions' risk secret. This is what the institutional traders, guys, English is my 5th language. Institutional traders use this secret. And then, of course, we are using an old powerful power in finance and everything else, which is called the compound strategy. Okay, somebody said compound interest is the strongest force ever. Strongest. Those who understand it, they reap the rewards. Those who don't understand it, they pay the interest. Okay. Those who don't understand compound interest, they end up paying it. Those who understand it, they take advantage of it. Okay. And so, guys, if you don't have your own set of rules, you're going to fall for anything out there in the market, out there on YouTube, out there on Instagram, out there on your webinars, wherever, gurus, and it's going to lead you to disaster. And that's what has happened to so many students we see coming to our group, and they have lost a lot of money. We went through that. Some of us have been online since 1998, and we learned the hard way. Okay, so we are shortcutting your learning by providing you this platform where we give free trainings every single day. We have a live. You can join us and copy the trades. You guys just show me taking trades live. So if you wanted to copy those trades, you could just get in. When I get in, when I get out, you get out. When I get in, whatever we do, you do exactly the same. Okay. Now, there's no guarantee you're going to get the same results because, as I said, we do not control the market. Some days you get in here and you lose. Some days you win. All you have to do is make sure you win more than you lose, so you can continue compounding your account. Okay? So, since Rome was not built in one day, guys, will you guys allow me to just go and then we come back and continue this tomorrow? Because Rome was not built in one day. We cannot build this 20K in one day. From $100 to 20K in one day, then we're going to have to sit here for like a few hours, 6-7 hours. Are you guys ready for that? I don't think so. Okay? All right, guys. So I'm going to end that and I'm going to jump onto the call. You can hear that's an important call that I'm going to get on right now. And I'll see you guys tomorrow. Make sure you subscribe to our channel, follow us, and of course, like this. And make sure you join the Smart Wolf Club so you're notified when we get to these trainings. Thank you and have a nice time. Goodbye. Goodbye.
I don't really know what comes next. I'm just doing my best, even though I'm so stressed out.